Hey everybody, this is Jim at SP500chart.com. It is Saturday evening, almost 9 o'clock, and I'm going to do the video now because it's a good opportunity for me to get it done. My wife and kids are off doing packing gifts for Operation Christmas Child, so I've got it to myself and we'll do the video. Before I get into it, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Okay, we're starting out with a 2-day chart. And what is a 2-day chart? Well, that means each candle that you see on this chart is 2 days of trading, plain and simple. You'll see a bunch of ovals, and these ovals represent times when and there's more. You know, as a matter of fact, I zoomed out a little bit more on this chart than when I put these on. So let's go ahead and identify a few more. There we go. These are ovals that represent periods of time in the S&P when there was a downward move of 4% or more. Now, these take place over various amounts of time, but you can see that over the past 3.5 years, there have been 1, 2, 3, 4, 5, 6, and actually there was a bunch of them back here because we were really going crazy back there. Let me start over again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 times over 3.5 years. That averages about 4 to 5 per year. If we look at it in the terms of years, 2012 was pretty light. We only had 2, but they were fairly deep. 2013, we had 3, and they were right in a row. 2014, so far, we've had 1, 2, 3, 4, and now 5. 2011, we had a bunch of them. So, why am I bringing this up? Well, I'm bringing it up because, just to remind you, to put things in the broad perspective, a 4% correction is historically nothing. That's a little bit like people who talk about things that have happened as being major events, but then when they're put, let's say a major event with land masses or with geography or geology or something, but when you put it on the time frame of a really geological time frame, you realize, well, you know, that part of that, for example, Mount St. Helens, that seemed like a major thing, but in the grand scheme of things, it's over and done with. Does that make sense? So that when we're looking at longer term charts, it has a tendency to take what looked like a really bad week or two and put it in perspective. Not saying that this wasn't an unpleasant week, but put it in perspective. So this has happened bunches of times. If we look at a 30-minute chart, you can see it's really kind of difficult to get a handle on what's going on with our support line, because at the end of the day on Friday, we blew underneath our descending support line. Now, when I saw this, I immediately, something in my head said, now wait a minute, where have I seen that before? Now I'm going to back out. I believe a 1 hour chart will do it right here. You'll remember that we were concerned about what was going on in in late September and early through mid-October. And we were looking at this chart, and I've erased a bunch of lines, but we had all kinds of support lines drawn. They were we had this one, we had one that I think started here and went here. Just to make a long story short, I went back and reviewed the video, by the way, for after we'd made that 1820 low, and I reviewed it, and you'll recall that I said, I think this is a sign of capitulation, because every descending support line that you can conceive of on this chart, and there were some well-defined ones, every single one got violated to the downside. And I think the words that I used at the time was, this looks like fairly swift selling all of a sudden giving way to irrational fear, and that's when that bottom got put in. Now I want to show you something that I think is really remarkable, and I want to be careful here, because sometimes you can look at a chart and you can be tempted to say, by golly, the exact same thing has happened, so therefore the exact same thing to follow, the unknown, will happen. You can't really do that with any real degree of certainty. But frankly, I mean, that is sort of what charts are all about. You're looking at what has happened in the past and trying to project it forward. But what I'm going to do right now goes a little bit beyond that. Okay? And this is what I want to show you. We broke some support back in late September. We had an initial dip. We had a pullback. We had a recovery. We had another dip. Then we had a recovery. Then that's when we made that final swoop down that took out our areas of descending support, but that ended up being a bottom. Now, fast forward, and I'm going to keep this part on the chart because we're going to relate what has happened right here after we broke support right there with what has happened after we broke support right here. Okay, we had an initial downward move, like the first initial downward move. Then we had a recovery, a second downward move, a second downward move, a second recovery, a second recovery, then a swift downward move, and now a swift downward move. This downward move took out our descending support line. This downward move has taken out, by a very small portion, our descending support line. We knew this was over when we finally recovered. We made this little inverted head and shoulders pattern down here. This will be really interesting to see if we follow the same pattern in the weeks ahead that we exhibited right here. And it's also kind of interesting to note, even though there's some differences. Okay, for example, these two the bottoms of these two recoveries were pretty much at the same level, whereas these were descending. But if we zoom in a little bit on a 15-minute chart, we are again looking at a situation in which every potential descending support line that you can draw has been taken out. By the way, I do not think this is a head and shoulders pattern here, okay? Because I think this was our support line right here for our little topping pattern. And here you can clearly see that the most obvious set of support lines are defined here and here and here, and yet we broke down underneath this descending line. And folks, this descending line is coming down at a pretty good clip. Now, let's back out again on a 30-minute chart. And there you see, coming up, breaking our narrow rising channel came as no surprise. That's got to break. That sucker cannot hold because it's going up too fast. When you look at it on the hour chart, it's even more. You can see just how aggressive that was. But from the bottom, down here at about 1820 to the top at roughly 2080, that's about a 14% move in less than 2 months. Actually, it made it in a little bit more than a month and a half. We have so far given back 4% of that high that was put in the week of December 1st. So 14% up, 4% down. I don't think there's really at this point in time a tremendous need to worry. That doesn't mean this is pleasant, and it doesn't mean that this is immune from turning into something that could be more serious. Frankly, every top the market has ever put in, at some point looked like, oh, this is just another pullback. Very rarely have you seen a top where the actual high of the market, where someone said, that's it, we're going down now. Usually, you don't find out for a little bit later. And that's the way the charts work. We put this low in. I thought it was probably going to be a short-term or intermediate-term low because it took out this support, but we really didn't get much confirmation to that effect until we made our inverted head and shoulders pattern. So this was what I will look for. By the way, the week absolutely stunk. We started out on the 8th. We broke support right here. We then broke support right here. We had both of these lines on the chart. Then we talked about the double top setting up, and I'll put that line back on the chart. I kind of cleaned it up a little bit to try to keep it a little nicer looking. That double top had a target of about the low 2020s. We made that. I was hopeful that we would bounce there, but, guys, that's why they call it a minimum target. They don't call it a minimum target because that's all that can happen. They call it a minimum target because that's what you can pretty much count on with reasonable certainty. So you can see there's that bottom right there. Interesting to note, if you've picked up on this, the resistance that we saw in the early afternoon on Friday happened right at where we had this little double bounce. So it looks to me at this point that 2025 may be at least an intermediate signal to us that the market is willing now to consider going higher. But I'm going to keep these same lines on the chart. I'm going to do this. We're going to extend this out. I'm also going to keep this descending line right here on the outside chance that we got a premature move over this line that was then accompanied by this move underneath this line. Not saying for sure, but that could have something to do with why we are under this line right now. So if we're looking at this chart and we're trying to discern when does it look like this is going to turn around, I think the first sign will be getting over 2025 because that appears to have some technical significance. Bounced on it twice this week. When we came back through it, it then turned into resistance. So moving this line forward throughout the rest of the week, we'll see if we mount a rally that can take that out. Then I'm keeping this line on the chart, and I'm going to keep this one right here too. So if at any point we make it over this, or this in any, and it can be doesn't have to be in that order, because frankly, if on the 17th we break this line, we will not have gotten to 2025 yet. So these, I think, are triggers about when we can expect this the S&P to turn around. The target from our inverted head and shoulders pattern back here, even though it's another one of those weird ones without much of a right shoulder, that target is still about 2120, and I'm not pulling back off of that target at this point in time. I don't think we need to do that. So guys, it was an ugly week. It really did not come as much of a surprise, because we saw right on Monday, we started to see the breakdown of some support lines here and here. Then on Tuesday, we broke our double top line, and then we got the expected move to about 2020s, the low 2020s. But then we started to see some additional weakness set in. I don't need to tell you that again. So let's watch this, and this as these extend forward. And I'll go ahead and do that here, so it'll be in your live chart. Whenever we start to take out some of these guys right here, then I think we are likely turning around and should be mounting that attack on 2120. And right now, I mentioned I thought there were two ways we could get there. One would be to take out long-term resistance at about 2100, and then test this up here. But this obviously has turned the S&P back. Okay, so let's see where we find support, where we put in a reversal. The fact that we are under this support line that is descending right now sort of makes me feel that we could be putting in our low pretty soon. So let's keep our fingers crossed. It's premature to say that for sure right now, but I'm looking at this line and I'm thinking, if we really continue to sell down through this line, get to if we were to say get down under 2,000 by a decent margin, then have a sharp hairpin turn, put in a hammer as a candle on the daily chart, then I think we could probably start to view that as a likely candidate for where we turn around. So guys, there's your video for trading on 12/12/2014, and also the weekly review. Appreciate you taking time out of your day to watch this, and I really do appreciate your support. Take care.